should we expect stablecoins to be even bigger than Bitcoin collectively, or how do you think about it?
So the strange thing is everyone I know right now wants to launch a stablecoin. So even TradFi or DeFi, right, does not matter. I think it depends. Like if that is successful, then all other yield instruments, regulated yield instruments will come, because once your money is on chain, right? What you will do with that? You need to build credit instruments for that.
What's going on, guys? Today we've got an excellent episode with Tarun Gupta. He is the founder and CEO of Coinshift. They have created a new type of yield-bearing stablecoin that I think you're going to be interested in hearing about. In this conversation, we talk about what's going on with stablecoins, how big can they get, why are so many people trying to launch these stablecoins, what the profound impact of people actually holding yield-bearing stablecoins could be all around the world to 8+ billion people. And of course, Tarun explains what they're doing, how they're doing it, what the risks are, and how they're trying to mitigate those risks. So I hope you enjoyed today's conversation with Tarun Gupta. Tarun, I thought a great place to start this conversation is, when I got into Bitcoin, I saw Bitcoin as a medium of exchange. It was a store of value, and eventually everything's going to be priced in Bitcoin, and you're going to get this hyper Bitcoinization. And one of the things that maybe I've changed my mind on is, at least in the short to medium term, Bitcoin really has dominated what I would call the global store of value use case, right? That is the thing that people are understanding. They buy it, they hold it, never sell your Bitcoin. It's going to be worth more in the future. And it's done a fantastic job of not only protecting your purchasing power, but actually increasing that purchasing power over time. What has changed, and what the new information was that really changed my mind, is that there has been the rise of stable coins for that medium of exchange use case. And so you all recently created this stable coin, and I think you got a lot of thoughts on it, but maybe we could start with this idea that, like, Bitcoin has got the store of value. Stable coins seem to be becoming more of like that banking infrastructure. How do you look at stable coins' role and like what's happening here?
Yeah, for sure. So the way we see this is, like, for the last 10 years, right? As you said, Bitcoin has been like pretty successful as a store of value. And that's why everyone thinks it as replacement or an alternative to gold reserves, right? But at the same time, what we have seen is, like, the world has changed into an internet economy, and the e-money, which we call it, like the banking e-money, is being like used by everyone very easily, right? And the emergence of neobanks, for example, like Revolut, Brex, or Mercury, has really decreased the barrier and democratized the access to financial services across the world, right? With just internet money. And after this, Bitcoin blockchain innovation, what we have seen is, like, because of Ethereum blockchain, you can really program the other use cases, right? And this make the emergence of these like two major stable coins, like USDC and USDT, became like the 95% of the stablecoin market today, which is at $200 billion, right? So think of, like, let's define, like, what does a stablecoin even mean, right? So basically, essentially, it's like a dollar putting on a blockchain, right? So what Circle has been trying to do in the last 10 years is, like, can you just bring dollars on the blockchain? Very simple use case, and it becomes like a simple money use case. And then it merits the properties of blockchain. What is the property of a blockchain? Is just this distributed ledger, right? So what the entire TradFi today is working on this problem statement of reconciliation and settlement, right? Why your money moves slow, if you think what the architecture of money is just dependent on this reconciliation and settlement layers. And the more you have basically the amount of money, the more risk you are taking while reconciling, right? And this specific property is, if you dedicate to a decentralized ledger like Ethereum, then you solve this risk layer, right? And if you have this risk layer solved, then you can move money irrespective of the amount at the speed of almost blockchain, right? So this is like a fundamental disruption, and that's why USDC has been growing. It's almost like 60 billion right now, and USDT is like almost more than $100 billion, right? That proves the use case. But what these stable coins are doing under the hood is basically they are just keeping these reserves. For example, in case of USDC, they're keeping majority of the reserves in overnight treasuries or in other government bonds, or there's like a reserve requirements, you can say, right? And their entire promise is, when you hold USDC, they will give you $1 when you want to redeem it. And that has been their promise for a very, very long time. And because the regulations have not been like super sorted for a very long time. Obviously you need to trust their auditor reports and everything. But yeah, I think this has been like the true use case so far. And now we are seeing basically because these stablecoin issuers are making money from their reserves, right? And they're not sort of easily can distribute the yield. For example, in US, you cannot just distribute the yield generated from cash equivalents like overnight treasuries. It is not legal right now. It is not regulated. And that's why we have seen the emergence of other stablecoins, which is like yield-bearing stablecoins, where users want to get the yield from the underlying asset. And we can talk more on that. But yeah, just to summarize, as like the use case is very simple: is money. A lot of people have seen they are generating a lot of yield under the hood. They want to take a portion of that yield, right? And there is a lot of demand of that yield bearing stablecoin. And that's why the last 5 years, if we see like there is a huge competition to these two stablecoins. Still, they have been like the strongest, but there are like 100 plus stablecoins exist. And out of that, there are emergence of stablecoins like Ethena, which is at 6 billion right now, and Sky, which is like MakerDAO, almost at $8 billion right now. So they are also growing, and we can touch more on that. But yeah, I think these are like the distinctions, and that's why it is working.
So you all are building like a yield-based kind of value proposition for folks. And one of the things that I always think about is in the United States of America, we're spoiled. We get yield, right? You go, you put your money in the bank holds on to it for you. They'll give it back to you when you want it. You don't worry about them taking it from you. They'll pay you some yield, although in certain accounts it's very low, in other accounts it may be a little bit higher. But this concept of compounding and yield generation, all this kind of stuff exists. If you go in many places around the world, let alone putting your money in the bank and them giving it back to you, that actually may not happen, right? There's not kind of as strong of a clear rule of law. But this concept of yield can be life-changing. If you now can save money in a asset like dollars that are better than your local currency, and you can then go ahead and get yield, that feels like it's pretty profound. And so talk a little bit as to how these yield-bearing stablecoins are working. Are people getting more stablecoins, or is it just like increasing the value, more like a stock buyback type situation? Like walk me through exactly how this works and how you guys have built it.
No, this is a beautiful question. So think of, right, once you as an institution or a business, you just start keeping these stable coins, right, on chain. So you are on chain right now, right? And once you hold this, like what you can do after that, right? And at the same time, the underlying stablecoin issuer is generating a lot of yield, which is not being passed to you. So the next thing comes once you have these stable coins on chain, the next thing comes is credit. Right, everyone wants to generate some kind of yield on top of it, and that's why the emergence of lending protocols in Ethereum just became like so popular, like Aave, Morpho, and there are like a couple of other lending protocols. So users are sort of generating an additional yield through these stable coins by putting into a lending pool, and from there the Bitcoin holders or Ethereum holders can come, they borrow these stable coins, and the end user gets like an IOU similar to bank. It's like a USDC in case of Morpho, in case of Aave, it's like an Aave token. And a USDC is representing your USDC that is lent out to Ethereum, Bitcoin, and other collateral holders. And that borrow yield is a real yield because there is a real demand for USDC in the borrow side. You generate this additional yield, very similar to your bank, basically, right? So there is a huge a combination of these regulated sort of stable coins with the lending markets. And that's how the end user is able to sort of generate a lot of yield. And then this was like the similar concept, if you know, MakerDAO. MakerDAO just does not dependent on, in the initial days, it was not dependent on any regulated entity or stablecoin issuers. So what they did is just come up with your Bitcoin, and you will be able to, come up with your Ethereum, and then now BTC as well. You will be able to mint the DAI directly, and the BTC holder is just borrowing the DAI, right? So any DAI is in circulation is backed by over collateralized Bitcoin or Ethereum, right? So this is another way to actually create a stable coin. But what is interesting about this, the generation of yield is the borrowing fees. Right. So what they did is they introduced this saving rate module around 2020. And what you can do is you deposit your DAI. It's like a saving account. You put it into a S DAI, which is saving DAI, and you get this borrowing fees as a yield. So think about the risk profile now. I'm a Bitcoin holder. I mint DAI. right? And DAI is pegged to $1, just on the ticker side. And then you put this DAI into SDAI, and then you start generating yield on your Bitcoin in a sense, right? So it's a very interesting way to really launch these stable coins, which can pass on the yield to the direct user. So the method we have seen last 5 years is just this additional staking layer. So you have this money layer, and then you stake it somewhere to the lending protocol or saving rate module, and then you pass on the yield, right? And then I think last 3 years, what we have seen on the yield use case is having this delta neutral strategy. All hedge funds are generally delta neutral, right? So let's say you have $10,000 worth of ETH. You are already longing this position as a collateral. You can go to perps exchanges like Binance and all. You can put like a 1:1 delta neutral position on the short side. So this delta neutral position, Athena-like player has tokenized that and brought it into DeFi. And they are calling it like a stable coin. We call it like a pseudo stable coins in Coinshift. But end of the day, it's representing a delta neutral position, right? And the more the market is doing the long, basically, the more yield you can generate, right, from the underlying collateral, and that has been passed to the end user. So these yield are, just to summarize, there are two sources of yield so far. One is the lending side. I'm talking like a real source, not like these tokens and all. Real source is lending. The second is delta neutral position. Both has very different risk profile, right? On the lending side, you are trusting the protocol you are using. You are trusting their risk managers, if they're allocating the right collateral or not, right? On the delta neutral side, you are trusting that issuer who's dealing with the custodians to have your collateral and dealing with the centralized exchanges, right? So I think these are the two ways, and it is getting pretty hot these days, like in terms of generating these huge yields. And we have seen for up to 30% of yield on USDC because of these two reasons, like lending protocols and margin trading, basically.
When you see very large yields, right, over 10%, 20%, whatever, obviously there has to be some risk that's associated with it. And how do you think about what those risks are, and then what you or others are doing to mitigate those risks? Today's episode is brought to you by Franzi. If you're a dreamer, a go-getter, or someone looking to own a business, you better listen up. Franzi is the ultimate platform to make franchise ownership accessible and achievable for everyone, from corporate escapees to side hustle seekers and investors. Franzi does more than just list franchises. It's equipped with the Franzi Fit Score, an AI-powered matching tool that finds the best brands for you based on your financials, your experience, your risk tolerance, and your goals. You can also get pre-qualified to see exactly what you can afford, check brand availability in your area, and discover the hottest new concepts hitting the market. And if you need guidance, Franzi's team of expert coaches are there to help you navigate the world of franchising and find the right opportunities for you. So whether you're just starting or you're looking to expand, Franzi's got everything you need. Head over to franzi.com/pomp today and start your journey to business ownership. Again, that's franzi.com/pomp to start your journey to business ownership. Today's episode is brought to you by Xapo Bank, where eligible members can unlock the power of Bitcoin without selling it. Need cash fast? With Xapo Bank's Bitcoin-backed loans, you can access 40% of your Bitcoin's value, borrowing as much as $1 million for a full year with low interest rates, zero fees, and no early repayment fees either. Now, here's the best part. You keep your Bitcoin, meaning you get to watch your holdings grow as the price of Bitcoin increases. Whether you're looking to buy a house, fund your child's education, or seize an exciting investment opportunity, these loans give you the flexibility to access cash without selling your Bitcoin. Unlike traditional loans, Xapo Bank's Bitcoin-backed loans have no minimum repayments, no early repayment penalties, and the flexibility to settle your loan in USD or Bitcoin whenever it suits you. It's liquidity entirely on your terms. Xapo understands the unique needs of Bitcoin holders. That's why they have developed a product designed specifically for you. With over a decade of experience in the Bitcoin space, Xapo Bank has been a trusted partner for those looking to make the most of their Bitcoin while keeping it safe. Your Bitcoin stays safe in your vault, untouched, never lent out, and secured in a global network of military-grade bunkers with cutting-edge security technology. Head to xapobank.com/pomp to learn more. That's xapobank.com/pomp. Go check them out at xapobank.com/pomp today. When you see very large yields, right, over 10%, 20%, whatever, obviously there has to be some risk that's associated with it. And how do you think about what those risks are, and then what you or others are doing to mitigate those risks?
Yeah. So Honestly, like as long as you are trusting, let's say on USDC, that is the first risk level, right? Basically, and then on top of this, you're trusting the lending protocol, right? So Aave is like at 30 billion plus in AUM. So you can say, okay, like there has been like a good trust and they have been not hacked so far. So there is a smart contract risk you are taking. And then their risk manager, you're taking the risk of their risk manager, because you cannot just say, okay, it's a smart contract. End of the day, you're reallocating the positions, right? So there is a risk manager and there is a DAO, and how centralized or decentralized is the DAO? It's always like a question, right? And it is not regulated, and there is no bankruptcy protection, right? You have in the banking. So overall, yeah, these are the risks you are taking, and then you are taking the risk of liquidation. So let's say somebody is borrowing from Bitcoin, USDC, right? Let's say there is a downturn in the market, so you need to liquidate the position, right? If you don't do that, you end up in a bad debt basically for your protocol, and that's why your collateral needs to be very, very liquid in the market, right? So you're taking typical all lending risk. Blockchain just brings the transparency, right, and over collateralization through a protocol, but every other risk is pretty much similar to lending risks, right? And in case of delta neutral strategy, you're taking the risk of exchanges, and we have seen exchanges go, down in the last cycle as well, right? FTX and all, and then you're taking the custodian risk as well, right? So because they are taking the custody, and this delta neutral strategy is not regulated at the same time. So all these are like additional risks, and I would love to like talk about like how we are mitigating and how we work with our stablecoin. But yeah, these are the risks.
Explain your stablecoin.
Yeah, so we launched CSUSDL, our own yield bearing stablecoin, which is backed by Paxos issued USDL. So Paxos is one of the largest stablecoin issuer after like Circle and Tether, and they work with PayPal, Mastercard, Stripe, as you know. So they work with the Abu Dhabi government, and they regulated this T-bills, like treasury bills yield out of Abu Dhabi. So what does it mean is like they're literally representing the risk-free rate of treasury bills every single day on a blockchain, right? And this is like real innovation. And in case of worst case, right, let's say Paxos does go down, still you have protection from FSRA out of Abu Dhabi. So it's a fully regulated stable coin, and they pass the yield through a rebasing mechanism. So every single day, your USDL goes more in supply. So you have one USDL today, it will go like 1.0 something, and that T-bill is accumulating basically, right? So what we are doing is we work with Paxos as a distributor, right? And after passing this yield, they take the management fees, and we take like a distributor fees, right? We make like 20 bips on every USDL minted through us. So think of CSUSDL is fully collateralized by USDL under the hood, and then we are combining the second source of the yield is like a lending protocol. So what we are doing is we are lending out this USDL to Bitcoin holders and Ethereum holders today. And how we are managing the risk of that, we work with Steakhouse Financials. So Steakhouse Financials work with MakerDAO with their entire RWA program of 2 billion plus. So they're one of the most conservative asset manager out there. So they manage the risk of reallocating all these positions. And at the same time, this entire system is working on Morpho. So Morpho is another lending protocol, which actually gives you an immutable system where they can't do anything with your market. It's an immutable market. So if you say, okay, the Bitcoin holders will borrow from us, right? So Morpho cannot do anything in that. It's a very protocol driven thing, and Steakhouse can allocate based on that. So yeah, I think the risk is lending side, which is also very transparent from the Morpho protocol. It has like 6 billion in AUM, and then the other risk is the Paxos and this Abu Dhabi sort of reserve management and all that. But at the same time, you are getting two yield components, right? One is the T-bill rate on a daily basis and the lending yield block by block, right? And this unique composition does not exist today by default, right? And we don't ask you to stake or do anything extra. You can directly hold CSUSDL through an exchange, decentralized exchange, and you will be getting these two components of the yield by default. And there is one more thing just I want to mention, is the depositor risk, right? So let's say you're an institution and you're putting like, let's say 10 million into our stablecoin, and you don't like how the collateral is managed, right, by Steakhouse. So there is a 7-day time lock period, which we have. It means whenever the new collateral is added, the depositor can veto the rights to remove that market and take their funds back. So this kind of system does not exist outside, CSUSDL, like our stablecoin.
And right now, like what stats can you share about how it's going so far, what yield people are earning, where these people are, what they're doing with it?
Yeah. So overall, Coinshift has been like a treasury management solution for the past 3 years. We manage over like 1 billion plus on Gnosis Safe, like a multi-sig account through only Coinshift by working with like all the largest institutions like Aave, Gitcoin, UMA. They are our clients, right? And what we are doing with CSUSDL, we launched in January 7th. And so far we are at almost like 37 million plus in the AUM of the stablecoin. And our offering is like largely for institutions because we want to reach to at least $100 million in total value logged before we start pitching it to businesses on chain, right? So everyone wants to like trust the asset, which is at least trusted by the larger institutions. So that's how this trust thing works, right? So right now the largest market makers like Ember Group or GSR, they already put CSUSDL on their balance sheet, like large liquid funds and large hedge funds already using it, and we are pretty confident to cross it to 70 million, like almost in next 2 weeks. So yeah, we are growing very, very fast, and the primary reason is basically the risk is very well known. The risk is very conservative, and everything is not controlled. The Coinshift cannot do anything from the assets anywhere. It's Paxos and the Morpho protocol, right? So that is the highest appealing part. And the yield right now, the market is even down. We are still yielding at like a 5.2%, basically, where the 4% is coming from the treasury bills almost, and then the rest is coming from the lending side.
And when you see this kind of conversation with these businesses, with these corporations and institutions, what are they looking for? Are they looking for better rails? Are they looking for higher yield? Something else? What is the value proposition to them?
Yeah, I think let's go one by one. So for liquid fund, for example, right, let's say you have USDC on your balance sheet. So right now, these institutions think USDC as their exit stablecoin. So they do something risky, let's say, or putting money somewhere, and they want to come back to USDC, right, rather than dollars. So can you build a risk profile which is closer to USDC? That was like our value proposition, because that's why we work with Paxos, right? So I think what they're looking for is like from lowest risk to highest risk, different instruments to put their money on. And we come at the lowest risk side. So recently Morpho executed like a third party audit on the credit rate, like overall ratings of all these vaults. And we are like one of the highest rated A plus rating in terms of the risk, underlying risk disclosures, right? So the risk profile matters a lot for these institutions, and we come under a lowest risk side as compared to delta neutral strategies and all. And the other reason is like CSUSDL has 96.5% LLTV, right, which is very, very difficult for a lot of these stable coins to get that highest loan to value ratio. And because of our risk profile is different, like people are willing to give loan on this collateral. So yeah.
And then how do you think about regulation of this stuff? You mentioned that, there's some stuff that may be specific to your local jurisdiction, but how do you think globally and then also locally?
Yeah, I think in terms of US, they are just getting started with the regulation. I would say it's pretty warming up. And I think the payment use case, like payment focused stable coins, it is going to be like fully regulated as the bill has been passed, right? After that, I think almost all fintechs either can use directly USDC, right, because it can comply the entire requirements, but they are not letting like this yield distribution directly to the end users in US yet. It is not regulated at all. So I will say it's a step-by-step process, because previously it was like little, so think about from the regulation perspective, it's already a a threat to the banking infrastructure, right? So the first use case is just have the payment use case, and then I think I'm pretty confident like over the years, everyone will realize, okay, passing the yield will make your dollars more dominant to the end users. But outside US, yes, you can do that. So for example, Abu Dhabi, in Bermuda, and you can build these kind of instruments where you can buy the T-bills and pass the yield to the end user. So these governments are utilizing their underlying reserves to pass that yield, right? So regulation is pretty becoming competitive. I would say US is just getting started, and because it's competitive. End of the day, if people are holding more US reserves in Abu Dhabi government, right, the other issuers will also feel, right, we want to provide the service to our users. So it's very competitive. And regarding Europe, I think they are the most stringent. I feel like in terms of strictness, they have like a lot of capital controls, and even on the payment use case and the reserve requirements are pretty tight. So in a sense, I feel it's good for the industry because it will bring more sophisticated players to actually have consumer protection for the end user. So I think we are in this time of the industry where you cannot just build any random instruments and pass the entire yield through your token, and so you just need to get into the real regulation. And yeah, I think Brex and Stripe and all these players are making major investments in stablecoins.
I think that makes a ton of sense. What is the biggest challenge for you moving forward?
I think first is regulation for sure. If I think countries like US and others like regulate this yield bearing instruments, it becomes so easy to really like launch CSUSDL there. But right now it is not available for US citizens. It is only for offshore, and that's why we only work with institutions, because they have these offshore setups, right? Very easily they can acquire the asset, right? So the real challenge is liquidity. How do you bootstrap the liquidity in the beginning, and how do you create on-chain liquidity, right? And how do you create mints and redemptions at scale? So Paxos has like a great experience in working with PayPal to build that entire infrastructure to scale, right? Because there is a regulatory requirement. You can't just mint and redeem that easily. So yeah, I think that they have been huge help in facilitating all this. So liquidity and then overall this regulation is the biggest challenge, I would say, to scale this big.
How big do you think stablecoins are going to be? We see Bitcoin's at $1.5, $1.6 trillion in market cap. Total crypto is, call it 3 trillion or so. Stablecoins are 200 billion. Should we expect stablecoins to be even bigger than Bitcoin collectively, or how do you think about it?
So the strange thing is everyone I know right now wants to launch a stablecoin. So even TradFi or DeFi, right, does not matter. I think very clearly the e-money should be like moved to USDC or like these kind of payment use cases, right? So we will definitely see like trillions of dollars coming in the next 5 years, 100%, like for sure. This is like inevitable after the stablecoin bills passes, right? And then I think it depends. Like if that is successful, then all other yield instruments, regulated yield instruments will come, because once your money is on chain, right, what you will do with that, you need to build credit instruments for that, right? And that's how the financial system works. So it's like saying when the internet happens in the early days, okay, a lot of people just believed cash because it's tangible and all that, right? But eventually everything moved into internet. Right. So yeah, I think the finance should work on stable coins, and that is the use case. And that's why these countries are regulating it. So we should expect like trillions of dollars.
That makes a ton of sense to me. Where can we find more information about Coinshift?
Yeah, so you can reach out on Twitter. It's like 0x Coinshift. You can reach out to me like Tarun Gupta 1475 on Twitter.
Amazing. I'm very fascinated with this idea of the yield-bearing stablecoins. You guys have been out at the forefront of working on this, and I think you got some pretty unique ideas around kind of your thesis of stablecoins, how big you'll think they'll get, and then also the infrastructure that's needed to be able to build this. So I appreciate you taking the time to come talk to us today, Tarun, and we'll definitely do it again in the future.